Hi everybody, it's FIBO Group and you're watching to the Market Watch review. Asia-Pacific equity generally rose with South Korea and Taiwan leading the charge. Stoxx 600 in Europe is cutting yesterday's 1.3% gain almost in half. US futures are also slightly softer after yesterday's huge run-up. Although the dollar is generally less than yesterday, it is still within yesterday's ranges. The only currencies that are less sluggish among G10 currencies include New Zealand and Canada dollars. Gold consolidates its almost $30 per ounce rally yesterday due to falling yields, a weaker dollar, and other factors. After falling each day last week, January WTI is now moving in the right direction for its third consecutive session. It is pushing just above $7.06. Asian Pacific market. The Japan extraordinary monetary policies, which were maintained in the face rising prices and continued fiscal stimulus and a dramatically weaker Japanese yen, did not stop an unexpected contraction of the third quarter GDP. There was also deterioration in sentiment among large manufacturers for a fourth quarterly Tenkan survey. After yesterday's softer-than-expected US CPI, which had topped at 138, the dollar was almost sold for JPY 134.65. The corrective upticks reached a peak in early Asia at 135.75, and it was then sold to JPY 134.55 in Europe's morning. Yesterday's rally in the Australian dollar to $0.6895 was its highest level since mid-September. Despite China's turmoil, the Australian dollar is still firm today at the upper end yesterday's range. Market of Europe. The UK reported a lower November CPI than was expected. Following a 2.0% jump in October, the headline rate increased 0.4% per month. This was lower than the Bloomberg survey's median forecast of 0.6%. From 11.1% in October, the headline rate fell to 10.7%. October's industrial output in the Eurozone fell by 2.0%, the largest decline of the year. Yesterday's euro spiked to $1.0675, its highest level in 6 months. The next hurdle is 1.07, where 1.24 billion euros worth of options expires today. Yesterday, sterling rose nearly 2 cents to $1.24455, its highest level since June. The currency has found support at 1.2340 and trading near $1.24 in European morning. Market of America. On the U.S. 2-year yield of its highest, the lower-than-expected U.S. CPI was about 24 BP. The market is now more certain that the peak rate will be reached in the first quarter 2023, and pricing in further cuts for next year. This is the background for today's FOMC meeting. It is not the 50 BP increase, which appears to be as good as it gets, that is the main issue, but rather the forward guidance. Yesterday, the US dollar dropped to a 6-day low against the Canadian currency. It was at CAD 1.3520. The next leg down might be signaled by a break of 1.35. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.